All right, welcome. In today's deep dive, our guest is one of the most outspoken, uncompromising voices in Bitcoin, and he didn't come from your average Bitcoiner background. He's done time at Google, Microsoft, McKinsey, Morgan Stanley, basically every institution Bitcoin was built to outlive. But somewhere along the way, he flipped the script, and now he's calling out the entire crypto casino for what it is, a swirling mess of scams, gambling, and regulatory theater. He coined the term scambling. He built Swan Bitcoin into the premier financial services firm for Bitcoin investors. He's onboarded high net worth clients, clapped back at the altcoin crowd, and helped shape the next generation of Bitcoiners with a level of clarity and conviction that most CEOs wish that they had. He doesn't mince words, he doesn't hedge, and he sure as hell doesn't sell you Solana. Please welcome to the Blockchain Report, the founder and CEO of Swan Bitcoin, Cory Klippsten. Welcome to the show, Cory. Our studio audience is just loving you. How are you today? It's so exciting to have you on the show.
Yeah, it's amazing you got this many people to show up here on the internet on a weekday. Yeah, we're definitely gonna crib that intro. I want all my bio to read like that from now on. So well done, Hank.
I love it. We did our research, and you're an impressive guy, and we're excited to have you on the show today. I mean, you have had such an interesting career, my friend. You've done time at Google, Microsoft, Morgan Stanley, McKinsey, literally the corporate Voltron. How did you become that guy, become Bitcoin's most savage maximalist? I would love to hear more about your story and your journey.
Look, Bitcoin appears to be built to last. It just seems like when you fall down that rabbit hole, like I did in 2017, 2018, and you come to understand it, and obviously your friends and outsiders will think that you believe it, but if you're a Bitcoiner and you've gone and put in the research, you know it and you understand it, and it's very rational. It does become very difficult to just kind of put it aside and not focus on it. And so I had actually left big companies back in 2013. I left Google, and I had been investing in the Silicon Valley ecosystem and advising, venture-backed CEOs and cutting angel checks and things like that. And yeah, it was two bull markets ago in 2017. I kind of went down the rabbit hole. I explored all the cryptos for 11 months, and it wasn't until March, April of 2018 that I really understood Bitcoin to be so much different than everything else, and that even setting aside any of the moral aspects of crypto scamming or whatever, just from an economic upside, and even more importantly, maybe from like a human impact and flourishing standpoint, Bitcoin is 100 times more important than everything else in the crypto space put together. And that was where I came at it from initially, was really just kind of an economic perspective, and where should you put your time? Well, put your time into something that's going to have the most lasting impact, and that's Bitcoin.
Yeah, you said you got into it initially 2017, but it really sounded like it clicked for you in 2018. Was there a specific moment that you stopped seeing Bitcoin as simply an investment and started seeing it as a mission?
Yeah, I would say that's definitely true. I think it was probably not till even the tail end of 2018 and into early 2019 that I started to see it as kind of something much, much bigger than just a career option or an investment or something like that. And that was really just tapping into the Bitcoiners. They were not as obvious and easy to find in 2017 because there was so much misinformation and just so much noise around crypto and ICOs and all of that. The first little pinprick in my crypto bubble was meeting Jimmy Song at a blockchain conference in Santa Monica at the end of October in 2017. But it really didn't quite take, other than that I put his and Tone Vay's YouTube show into my rotation while still messing around with tons of crypto stuff. And just little by little over the course of that winter, Andreas Antonopoulos videos. And so I kind of devoured all of those, over the holidays and into January, February. And then the crash helped. You kind of see, all this stuff was pretty puffy. And I think the altcoin peak was the beginning of January 2018. And then it just completely crashed. And they went down, 99%, 99.9%. And Bitcoin went down, but not like those other ones. And then you started to have selective attention and selective perception for the Bitcoiners in that early stages of the bear market, because they were staunch believers And then you go back and kind of, pick up some follows and go back through their then Twitter history, now their X history, and yeah, just kind of start going down the Bitcoin rabbit hole. And that was really, yeah, it was that period where I really got up to speed and came out the other side as a Bitcoiner.
Yeah, and you mentioned Jimmy Song. I mean, he's a convincing guy. He was actually the first guest we ever had on our show, so I definitely have some understanding of how he might have turned you in that direction. I mean, he's a hell of a podcaster, and you yourself have been a podcaster. I mean, you've worn a lot of hats, right? Founder, investor, podcaster, podcast guest, advisor. Be real with me. Which version of you is having the most fun right now?
Probably dad.
That's a
Realistically.
great answer.
Yeah, yeah. No, I mean it is true. Like that's the this is busy and you get, you're in fights in public and you get a bunch of arrows in your back and all that, but like it really doesn't matter when you get home and you just chill, so I just enjoy being around the kids. Um,
Is that,
I
yeah.
think as far as like the media side of things, I actually started out my career in broadcast journalism. So that's my degree for undergrad is broadcast, and I was a really crappy local NBC TV reporter while I was still in college. And so I was kind of there as the internet converged with traditional media, and I was on the Yahoo convergence listserv in the
Yeah.
late 90s with 80 journalists that were trying to figure out how to do internet things. And I built my
Yeah.
local TV station's first website back in 97 or something like that. So
Hmm.
I actually got into tech through the journalism side. That's how I ended up at Microsoft, is because they had done the joint venture with NBC and they had bought Web TV,
Oh.
which was like interactive television back in the day. So that was how I ended up getting into tech in the first place. Later, I went and
Oh.
got an MBA and kind of learned the finance and business and entrepreneurship side of things. But, that
Hmm.
was my background. And then as I got into startups, I really had, again, kind of just an eye out for people that use content and education and truth finding and truth telling to market their products. Basically, if you can put out educational content and do that at scale and get a lot of reach, then that provides really cheap customer acquisition costs, and you don't have to spend on a ton of ads. One of
Hmm.
the companies that I followed from a very early time was 37 Signals, which became Basecamp. So that's like Dave Hennemeyer
Yeah.
Hansen and Jason Fried, and they were in Chicago, and I knew them. And Dave was like a social friend, and Jason was one of the first people that I met. And randomly, I also became really good friends with their first employee. Their first employee they ever hired was his title was author. So a guy
Okay.
named Matt Ruby wrote the Signal to Noise blog for 37 Signals back in the day, and he basically ghost wrote their first two New York Times bestsellers. I think he wrote Rework and one
Hmm.
of the other ones. So we were social friends and still are to this day. He actually wrote a lot of the first educational content that we put out from Swan in like 19 and 20. Also officiated my wedding back in 2012, interestingly, which was nice of him. Thanks, Matt. Um, but I kind of always understood things through that lens. You think of like Casper, the mattress company, and they try to own the sleep category for uh, for content, and put out tons of information on like how do you sleep better, and then they sell pillows and mattresses. Or even you take something like I think another formative one was I was around the College Humor guys back in the aughts. So this was like Ricky and Jacob. Jacob was coding Vimeo by himself as a side project back then. And Josh Abrams I kept in touch with for like a decade. And I always liked that they didn't have ads on their site other than the one thing that they owned. So they put out
Hmm.
all these funny videos. This is before YouTube, right? And
Yeah.
the only thing on the College Humor site was busted tees. Remember all those T-shirts like getting
Oh,
lucky in
yeah.
Kentucky? So they,
Hmm.
making T-shirts for 50 cents, selling them for $15, and it was a moneymaker, and they sold to IAC. So I watched that kind of over and over again, and I gravitated towards startups over the years that had a facility with spreading the message through education and providing value, and essentially getting, much more scaled, near free customer acquisition. And then I spotted that and was really kind of aware of it as I started to think about what I wanted to build for a company in the Bitcoin space. From the very beginning, that was kind of the root of it, was if we can provide great research, great education, and provide that signal in the noise of crypto and provide that Bitcoin signal. That was what it was all fashioned around. And then that would give you distribution that you could then launch product after product, service after service, and build a company around that brand and that reach that you would have from providing the information. So that was always kind of the goal from the beginning.
Makes sense. And you said you got your, was it your MBA in Chicago? Was it Booth, I assume, I think, right? I think I looked that up about
Back
you. Was
then,
it
it was
Booth
the
School?
other GSB, and then
Okay.
yeah, the big gift from David Booth came in like 2008 or 2009, and
Okay.
then it changed over to Booth. Yeah, so I'm old enough that I went to the Chicago GSB.
How long were you there for? I'm actually from Chicago myself, so I'd
Oh,
love
you
to hear
are?
anyone
Yeah,
who's
so
had the
it
opportunity
was
to spend time there.
'02 to '04. I
Okay.
was at Chicago, but then I also lived in Chicago from 2006 to 2013, and met my wife there in 2009. We got married and moved to LA.
You and I had a similar journey. Midwest, we're good people. So yeah, I was in Chicago and I was in LA for about 7 years, so I understand the journey a little bit.
Yeah, yeah,
And
Chicago's great.
yeah, I love it. I mean, summers are the best. The winters, as you know, like, that's why we all end up ultimately leaving. But it's fun during the warmer months for sure. Your journey is really unique and interesting, and you are very interesting in the sense that you invented a word that I want to talk about, known as scambling, and it kind of broke crypto Twitter at the time. Be honest with me. Did you know it would catch fire like that? And what was the impetus of you developing this word that is now pretty popular?
Um, I think because there was a big push on the crypto side to say, hey, it's just gambling. And that was actually kind of the casino analogy for what's going on in crypto wasn't accurate. And I mean, it was already a big come down from actually delivering utility, but at least, the baseline that the crypto VCs were promoting was like, hey, it's just like a casino, but it's not
Mm-hmm.
at all because
Oh.
in gambling, you know what the rake is, you know what the house rake is, you know what the odds are in a given game. So let's just say like in
Mm-hmm.
Vegas, like the house is taking 4 to 6%, depending on the game. It's not like that. Not only is it opaque, but also on average, the insiders are taking more like, 50 to 90%. They're in at half a
Yeah.
penny, and when retail finally gets to it, it's $1, that kind of thing.
Mm-hmm.
So it is, you as the target or as the mark are gambling, but you're getting scammed. So there's
Right.
scammers presenting something as gambling. So I think the combination of the two is pretty apt and accurate.
Yeah, that makes a lot of sense. And
It's not
that
the
sounds like
only,
something.
it's by the way, it's not limited to just crypto. I think there's gambling in a lot of different places, out there. It's like
Yeah.
anywhere where the rules are not transparent, where they're not fair. And I think that's the big
Mm-hmm.
difference between stocks, because the other thing they always compare cryptos to is like penny stocks, but even penny stocks have disclosures and they have penalties and they have regulations.
Mm-hmm.
And so it just is like you even see some of these Bitcoin treasury companies launching and it's like, oh, this deal is better than that deal, or this one looks pretty egregious for investors and they're going to get soaked. But like it literally is all there in the filing. And it's up to you whether you want to read it or go look up what somebody said about it. And you can go to it yourself. It's like they're required to tell you exactly what it is. So it's kind of like
Right.
your fault if you buy one, and maybe you have other reasons to buy it, because you think,
Mm-hmm.
hey, okay, the starting point may not be the best and it's a little extractive at the beginning, but I think they're going to crush it over the next 10 years, but at
Right.
least you have that transparency around that you don't get in the crypto world.
100%. You've so during your very interesting journey from traditional finance, I mean, Google, Microsoft, or McKinley, all that stuff, to now, is there anything that you believed about Bitcoin early on that you've completely changed your mind about today?
Well, that's a good question. So let's see. The first, I'll see if something sparks just by thinking about what the early influences were. So I do have to, by the way, when I got sucked in through kind of the VC angle, because a lot of my VC friends were like jumping over and taking jobs at ICOs and stuff like that. So it was
Mm-hmm.
May of 2017 that I got sucked in, and I started reaching out to people that I thought would know something about it. And I do have to credit a crypto fund manager, Tucker Waterman from Distributed Global. He was the one that said, start by reading this, and he gave me Digital Gold, the Nathaniel Popper book from 2014, which even though Nathaniel never really became a Bitcoin believer so far, that book is spectacular, and it's a page turner
Hmm.
because he's a really good writer. So it's not
Yeah.
my top reco, but I often, after people get through like, inventing Bitcoin and Broken Money and Bitcoin Standard and a few others, like I'll always try to, fit Digital Gold into like number 5 slot or something like that on people's rabbit
Ah,
hole journey because it's fun to see how accurate it was even back then. Like you just captured kind of what Bitcoin was in a great way. Um, when I came in 2017, I think a lot more people, obviously, there was just so much noise about Bitcoin as payments. The block size wars were ongoing, and I think the Bcash split was August 1st, so it was really confusing to have that happen, 9 weeks after I ever even started reading about Bitcoin. You've got this big fork. So that was super confusing. And I think just kind of it wasn't until the winter that I really understood, the path by which something becomes money. So it was like, early 2018 that I was like, oh, got it, right. 3 functions of money: store of value, medium of exchange, unit of account. And even though Bitcoin is all 3 of these things for some people
hmm.
today, broad adoption is going to go in that sequence. And so we have a little bit
Hmm.
of, medium of account, and we've got some Bitcoin nutballs that really think about their, net worth and what they spend. That unit of account actually is Bitcoin for them, but it's a few thousand people in the USA. There's probably
Hmm.
like a few 100,000 people in the West using it as a medium of exchange regularly, but there's tens of millions of people using Bitcoin as a store of value, and that it will become a very widely used medium of exchange once the volatility is reduced quite a lot, and once the monetary capacity of the network is like up at least probably 10x from here. I think it has to be at least $1 to $2 million a coin with significantly less volatility, which it will have at those levels, for lots more people to choose to use it and accept it as a medium of exchange.
Yeah, and you're starting to see it slowly happen. I mean, today, I believe, is the inaugural day that Steak and Shake is now accepting Bitcoin for payments. And at the Bitcoin conference, I know in 2 weeks, they're trying to have the single largest day of people utilizing Bitcoin for purchases, hopefully for a Guinness World Record. So I think you're right. I think it's something that's slowly, gaining traction, but it's probably going to be a while until we see it on a mass scale. You, in fact, have kind of planted Swan's flag in the ground when it comes to Bitcoin only, no altcoins, period. Is that something that you feel like has evolved for you over time? Or was that always the case and you were just like, I don't think there's value in these. I'm Bitcoin only the whole way?
That's been the case since spring of 2018, and we started the company in summer of 2019. So yeah, I was completely Bitcoin only long before starting Swan.
Hmm. What's the most persuasive pitch you would give to someone who doesn't get why that matters and why it should only be Bitcoin and not all of those other options out there?
I mean, 30 million altcoins, and every single one of them is down at least 50% since their all-time high in Bitcoin terms,
Good
and
pitch.
almost all of them are gone. And most of what's rest is down over 99%. So like you can just make like a first whack at it is just purely the economic or investing case. It's like, and then you can go deeper and you can kind of explain like only one of these is actually decentralized and not issued and managed by a company with a roadmap from a founder, et cetera. So, just on and on and on. What's great is like the top of funnel for Bitcoin for 6 or 7 years was crypto, and it was $100 billion of crypto VC money pumping out false narratives about Bitcoin so that they could sell their altcoins. And that's changed a ton in the last year and a half. With the launch of the ETFs and kind of the rise of Bitcoin treasury companies, it's completely different now. So a company like us, two things happen. One, we used to like fight it out with altcoin exchanges and, Coinbase, Binance, whatever for that first touch. And that's why we launched and, kind of promoted pleb stacking and, start with Bitcoin and all that. You don't even have to do that anymore because most people are getting access to MicroStrategy or FBTC or IBIT or something like that in their brokerage account. And those people have an inferior product because it's paper Bitcoin, it's an IOU, or it's, just a different risk reward trade-off versus real Bitcoin, but they're not lying about Bitcoin. They're telling the truth about Bitcoin. And so it's helping people get started down the rabbit hole. And so we're not top of funnel battling it out with the altcoins anymore. We sit right below, you know, Uncle Larry and Auntie Abby and crazy cousin Mike talking about Bitcoin every day on TV. And, it's just like Bitcoin bends everybody to its will. I think of like,
Hmm.
Bitwise, for instance, which used to be like so heavy on crypto and have like their top 10 index fund and all this kind of stuff. And it's like, now it's all Bitcoin products, Bitcoin funds. Jeff Park is, basically a total maximalist at this point. Matt Haugen is giving like glorious speeches on Bitcoin, going and visiting institutions 50 times a year, just talking about Bitcoin. Like it just brings people back around. I think it's great. You've got like even a shop like Galaxy that's, was like one of the biggest proponents of Luna, and their head of research is one of the most staunch maximalists out there. I'm sure you probably had Alex Thorne on, but like, wherever you go, basically now in crypto circles, it's just people have either turned into Bitcoiners or they've just like, accepted the reality that that's the future.
Yeah, I mean, I agree with you. And what I'm hearing is I should probably sell my Trump and Farcoin and reinvest that and go full on Bitcoin. I think I'm spread a little too thin right now. So I appreciate hearing that from the tip of the spear like yourself. In
Well,
terms of
I do
like,
think
go
that
ahead.
the trend of companies starting Fartcoin reserves, strategic Fartcoin reserves, is probably not going to stop anytime soon. That seems inevitable.
Yeah, they're saying it could be a game changer. We'll see. I don't know. I'm waiting for some utility other than flatulence, but who knows? So, Cory, I want to talk about Swan a little bit.
Yeah.
Most platforms, as you see, especially in the tech world, are chasing scale at all costs. You guys have chose to build Swan and go a little deeper, not wider. What made you decide to go that route? And do you feel like that's ever bitten you, maybe in the short term, even though the long-term vision for that feels and seems completely sound and solid?
So you could either do one thing or you can do several things. And so,
Hmm.
if you start out being an exchange, and this is, the quandary that Jess Powell and the Kraken team found is like, there's things that they don't want to list. Jesse is a Bitcoiner and he started a crypto exchange back in the day, mostly just because he wanted people to be able to trade Bitcoin. But if you don't have the other things that people want to trade, then, and another exchange does, then you lose volume, you lose liquidity, and that basically spirals out of control and you just kind of go out of business. And so there's that, as soon as you open the floodgates and you start adding some altcoins to your exchange, then you have this, natural, it's path dependent. You have to kind of add them all. So he had to hold his nose and like, add Luna, even though he didn't like it, or whatever
Yeah.
dog shit coins from the last cycle. And they have to add them all,
Yeah.
right? And as much as, Balaji kind of ruined Coinbase in 2018 after they bought his, whatever scam ICO education company or whatever, uh,
Hmm.
you know, at the time they had four assets and they were getting crushed by Binance. And, if you want to continue to be a crypto exchange and you don't want to sort of take the path of being something else like a Bitcoin financial services firm, you have to do what they did. And they made that decision and they added 100 assets in 12 months and became kind of the broad-based crypto casino that they are now. But that's just a function of like the business that you're in. And I understand, like I actually have a lot of sympathy for it because I don't think that, if you started a crypto exchange in 2012, 13, 14, and you think of some of these guys like the Bitfinex guys that are hardcore Bitcoiners or
Hmm.
Jess who's a hardcore Bitcoiner, like you they hadn't done much of the evil yet. Most of the evil came in, 17 through 23, 24. And so I think that if I had started a business back in 2014 because I, maybe had found out about Bitcoin back there and went nuts, probably would be a crypto exchange and I'd probably do the exact same thing. So I benefit in some ways from being late because it would have been impossible to start a Bitcoin financial services firm in 2014. Even doing it in 2019 was probably too early, which is
Hmm.
why so few have survived. Like there's hundreds and hundreds and hundreds that have gone out of business, and there's a handful that are still around. It's like us, River, Strike, Unchained, Fold. There's like 5 out of like 500 are still around.
Wow.
And so like anybody that's still around, now that it's become obvious, now it's obvious that you can start a Bitcoin financial services firm and that you can provide like inheritance advice and custody in 5 different flavors and asset-backed loans and Bitcoin rewards credit card and asset management that gives you like more risk reward or less risk reward and like all these different things that are natural to offer around Bitcoin for the Bitcoin investor. But that was not clear at all back when crazy people were making these bets. Like I think Unchained started in 2016, Fold maybe 2015, Strike in 2017, and I think us and River in 1920, something like that. So like, you know, it does look kind of crazy that we all made that choice. But you know, given that we've been able to survive, like we're all looking pretty smart now.
Yeah, I mean, as they say in life, timing is everything, right? And it sounds like the timing just worked out well for you, as it has for some others and hasn't for a lot of others, you know? And in fact, I was reading something and it said that you mentioned that you believe Bitcoin's a 50 to 80 year global money project. What's the next real milestone that will tell you that the Bitcoin train is still running right on schedule?
So right on schedule, in my view, would be hitting $1 million before the end of 2030. So I've been saying that since 2020 that I'd like to see sat cent parity by 2030. You know, and that is the one metric that we're actually looking at, really. It is its price versus the current dominant global currency, which is the dollar. And that is really the one metric that this boils down to. So that's probably the number one thing. The other thing I've said often that I would suspect is I'm probably already hedging and pushing it out. I'd say starting in probably 2020, I said often that I thought you'd be able to buy most goods and services around the world denominated in sats by 2035. I think that's aggressive, and it's probably pushed back 5 or 10 years would be my guess. Because most means like more than 50%.
Right.
You know, that's a lot. And so I think a lot of people in the US don't really realize like how many places around the world already have 2 or 3 currencies on the price tag. So it's actually a lot easier for me to believe that and have other people believe that when I'm over in Europe or Turkey or something like that. In the States, people have trouble imagining it because the dollar works great here and it's not really a problem for most people.
Right. What do you think is the biggest barrier from having Bitcoin used as an actual like currency by 2035? Is it education? Is it maybe the tech? Like, does it need to be a little more streamlined so you can just take your phone like Apple Pay and then pay with your Bitcoin? Or what do you feel like is the biggest challenge there?
You can already do that. There's a bunch of products already where you can just pay with, Apple Pay and your card is debiting your Bitcoin balance. That's never been the issue. Like, as Saylor said years ago, like the last mile, not that it needs to be, but it can easily be solved by the existing players. Because all you're really doing is just like, look, I go pay for things all the time throughout Europe and Turkey and Asia, and it's just debiting a dollar balance and the merchant is receiving their local currency. That's not hard. None of this has ever been hard. What matters is what does the merchant want to store his value in, and what are you storing your value in before you pay? It's never mattered what the medium of exchange is, other than for hobbyists and people that are like kind of evangelizing and using it as a way to spread Bitcoin and show how cool it is that, hey, literally this used to be self-sovereignly owned by me, and now it's self-sovereignly owned by you over here on this phone. And that is magical, and it is a big part of like the education journey for a lot of people. It's one of those things that kind of sparks an oh my God moment. But it is, again, not going to be until there is dramatically higher adoption of Bitcoin as a store of value, which comes with a corresponding drop in volatility. That's the only thing that's going to make it get broadly adopted by, lots of people as a medium of exchange.
Right. I almost think, how do you convince people of that? Because I've talked about on the show before, if you scale back, right, at Bitcoin, it's actually very consistent, but we do have these moments of perceived volatility. So is there like a certain price it needs to reach where people stop freaking out every time it drops 10%? Or what do you think?
It's not the 10% drops that people are worried about. It's that 2 bull markets ago, it went down like 94%, and then it was 86, and then it was 86, and then it was 77.
Okay.
So if we can just keep, like, Look, it's going to be a victory if after the new all-time high from this, bull market that I think we all expect to pick up here over the next 6 months, if the drop from peak to trough is less than 70%, then that's going to be a victory.
Okay, so we just need to keep seeing some more progress on those big drops, and then eventually they'll
Being
be
lower and
small enough
lower
for
and
people.
lower. Exactly.
That makes
Yeah.
sense.
And maybe at some point
Yeah.
we just stop having 4-year cycles too.
Right, right. I wonder if that's kind of going to be a thing of the past. We're seeing all this institutional adoption. The United States is talking about actually acquiring Bitcoin actively. Do you think nation states actually putting it on their balance books actively is going to be kind of the end of these halving cycles as we've known them?
Look, they're not over until we see one not happen. So
Right.
I'm waiting.
That's true.
And
Yeah, you and me both, brother.
yeah, and it has a weird because we actually had global market pullbacks in 14, 18, and 22. It still remains difficult to see what's happened and like disambiguate what happened with like mining driven halving cycles versus like global macro liquidity driven cycles, just because there have also been bull markets in equities in 13, 17, and 21. So it's like, it looks like we're kicking off the money printer in another bull market here. And obviously the incentive of the party that's in power across, the House, the Senate, and the executive right now has all incentives to try to pump the market as much as possible heading into the midterms. Otherwise, they have like literally no shot of holding the House and
Right.
probably not the Senate either.
Yeah.
And so once again, I don't know that we'll know whether it's
Yeah.
halvings driven or liquidity driven, because we're about to get, the money is going to be printed. CPI came in at 0.2 instead of 0.3. So they've got, all the signs point to print. Yeah, the other thing I look at though is like in some ways the geometric decline of trough to peak rises is already broken. So just using kind of round numbers, up until the peak of 2013, we went from $2 to say 1,100. So that was like a 550x rise.
Yeah.
Interestingly, we bottomed out around like 180 in 2014, at the end of 2014, and then it went up to 19,700 at the end of that was I think December 15th or 17th of 17. That's 110x, exactly 1/5, 20% of the previous pump. And then in 2021, we went from it went down to 3150 in December of 18, and then it rose to 69, I think 69.4, something like that, in the peak of November of 2021. 22x, exactly 20%, interestingly, of 110x. So it kept on geometrically declining by 80% in each of those.
Right.
And so if you did that again, it would be 4.4x. And we bottomed out at 15.5 after FTX collapsed. So we've already broken that kind of geometric decline because we're up a lot more than 4.4x from there, which is nice.
That's a good point.
So in that view of kind of geometrically declining cycles, like that's broken, which is nice. And then I think the next one is, can we break this pattern of like the massive, massive pullbacks? So I'd like to see sub 70 this time. And then it would be nice to see like sub 50 for the one after that.
Please, yes, I want my Lambo by 2030.
Yeah.
Do you feel like this speaks to the maturation process of Bitcoin as an asset class? I mean, we're seeing a flood of normies going to like ETFs and stuff right now, right? And at Swan, do you actually want to convert those people, or are you fine letting them sit in TradFi Bitcoin jail?
No, we try to convert them from ETFs. And again, I think what we like the conversation starting, and we find that they get in touch with us once their liquid net worth tips over around 1% Bitcoin price exposure. So if they start with a portfolio and they buy some ETFs, and either they buy more or they buy some MicroStrategy, or the price goes up and now it becomes more relevant to them because it was 1% target and now it's 4% of their portfolio because price went up. that's when they start seeking out more broad-based Bitcoin expertise and additional products and services, and that's when they find us.
Gotcha. And at Swan, you're starting your onboarding some traditional finance, right? You've got regulatory momentum, you've got heat in New York, but how do you keep Swan from just turning into like another fintech company out there? What's making you guys different than all the rest?
Well, I don't know that fintech is really that apt. I feel like fintech is kind of a proxy for payments. And so that would be kind
Okay,
of mapping over and trying to be like a retail bank, which I think is a
fair
lot
enough.
more kind of in the DNA of probably more like Fold and Strike are much more kind of banking
Mm-hmm.
app oriented and kind of cash appy. Um,
Mm-hmm.
I think the ones that are probably a little bit more focused on, you know, more of a financial services lens is probably like us and Unchained and River. And so yeah, I mean, I think that's where we are. It doesn't mean that we won't get into payments sometime in the future, but it will be because of user demand. It'll be because there are a bunch of feature requests, you know. So like today, every client of Swan actually has a bank account and a routing number,
Okay.
but we don't surface it because there's no demand for that to be surfaced and nothing that they want to do with it, you know,
Mm-hmm.
but we can turn that on in a
Yeah.
couple of weeks and expose it in the UX when we want to. And we can give them debit cards and payment cards and all those kinds of things as they demand it. So, you know, it's just kind of I think there's a bit of a bifurcation between do you want to be like, you know, like retail banking or do you want to be, you know, a financial services firm?
Yeah. I mean, I guess that kind of speaks to what we talked about earlier is instead of casting a wide net, you guys are just kind of focusing on what you do really well right now. And then when the demand is there, you'll meet that demand. But let's not overextend ourselves in the meantime. Let's just keep crushing it at what we do best. Is that fair to say?
Yeah, I mean, look, we're talking a lot about, you know, what is like that one KPI that kind of boils down and you know, what was the Facebook one from back in the day? I think it was like they wanted to make sure that you got 7 friends in the first 10 days, and if you did that, you would stick around. And they basically like it was one
Hmm.
thing that they aligned everything around for so long. Still
Yeah.
trying to figure out how to operationalize this one, but we have around 1.2% of all people on the planet that own a whole coin are Swan clients, and
Hmm.
probably a bunch more that, you know, have an account that we don't know what they've bought or what they hold. Um, I just want to 10x that. I want to have more than 10% of people on the planet that own a whole coin have a deep relationship with Swan, and they have a private advisor like a Steven Lebka or a John Haar or Alex Stanzik or one of these folks on our sales team. They have a Bitcoin guy or a Bitcoin gal that they can call, they can text, they can Zoom, they can go meet at events, they can go to dinners, they can get private invites to Lynn Alden webinars, like all that kind of stuff. Like
Hmm.
that's what I want.
Yeah.
It's
And
like
and
a building
speaking
a
of, yeah, go
cohort
ahead.
and a network of like the new global Bitcoin devoted investors.
Yeah. No, that makes sense. Speaking of people that own like more than one Bitcoin, I would love to talk to you about strategy. As I actually read something that you said, you feel like more companies should follow the strategy or micro strategy playbook. And I guess my question for you would be, what's the biggest psychological barrier you see from stopping more companies doing that right now?
Well, so that would have been a much more interesting question about 2 weeks ago, but there've been such a flood of new announcements in the
Yeah.
interim that it feels like the market has answered it for us. Lots of people will do this. So my
Hmm.
thesis going back more than 2 years, when I first started a Slack channel at Swan called Sailor as a Service, which was basically like how can Swan help companies and people kind of think about this through the MicroStrategy lens. Um, you know, I there was a big narrative for a couple of years, mostly pushed, I think, by probably Bitcoin Magazine and UTXO because they were trying to do, you know, clones in other markets like Metaplanet, Hong Kong, stuff like that. And then probably the Bitwise guys because they were kind of really pushing the narrative of like there can only be one per market. And I think in the Bitwise case, maybe it was because they have a bunch of asset management products and they were willing to cede the territory to just MicroStrategy, but you know, saying like, oh, there's only one and otherwise come to us for all these things. You know, that basically has flipped obviously in the last 6 months. I think the biggest signal for that probably was back in November when Marathon did a $1 billion convert and they got 0% interest and it was oversubscribed. And I think that was kind of the signal to the market that, oh, there are going to be lots more companies acquiring lots of Bitcoin. And
Yeah.
then I think, Fold was able to launch with their SPAC merger, and then really the rise, Metaplanet took off and crushed it. Unbelievable year, continuing into this year. And
Yeah.
so I developed a thesis last year, which I started writing about, and I had to create a term because I didn't want to say like MicroStrategy strategy or MSTR playbook because it just sounds like a clone thing. And I think there's going to be a lot of different flavors of this. There are some that go whole hog and just become accumulators and have, the KPI being Bitcoin per share and that BTC yield kind of incrementing over time. And then there's others that have great reason just to have some Bitcoin on the balance sheet, but don't have to go whole hog. And so, distinguishing Bitcoin treasury companies, which is anybody that has Bitcoin in their treasury, from a subset of those that are Bitcoin accumulation machines, that subset needed a term that Wall Street could use and could understand. I don't think it's particularly useful or attractive for retail to call it what I ended up calling it, but I came up with leveraged Bitcoin equities or LBEs,
Okay. Yeah.
7, 8 months ago, and I think it's pretty well adopted by the MSTR True North people and things like that. May have to adjust it again because I think the SEC says they don't like MicroStrategy talking about leverage, which is where you get the word torque now. But it was really helpful for me because of the way it rhymed with LBOs historically, leveraged
Okay.
buyouts, which is basically almost always involves a go private transaction, taking a public equity and taking it private. And what's so cool is like the ingredients of a private equity target are usually present in most of these candidates for a leveraged Bitcoin equity strategy as well. It's do you have cash flow and do you have a low market multiple because the market doesn't trust you to reinvest your profits? And then the last thing that you need to do in LBE instead of an LBO is like a Bitcoin zealot. Either it has management or on the board, or you have to like manufacture that. And so, I basically started, trotting this thesis out through Wall Street last fall that I thought there would be as many LBEs each year as LBOs. So like, 30 to 40 LBEs each year converting instead of dying or going private or just kind of trundling along, they would all kind of go the MicroStrategy route and choose to become Bitcoin treasury companies. So that's been useful to think about, and I think we're starting to see the thesis actually play out now. Unsurprisingly, it's the ones that can move faster and don't have the inertia of an existing board and shareholder base. It's much easier to just do a SPAC or an RTO and kind of get started with fresh capital. So I think that's the initial cohort that you're seeing of all these people doing it. But I think you'll see more and more, real operating businesses that have a reason to do it. I also think you're going to have a category of growth companies that do it. So where they're not, as Saylor would say, like a zombie company. And by the way, there's nothing wrong economically of like tossing off $500 million of cash every year or whatever, or $50 million of cash. Like if you have a business that's tossing off cash, being able to put that into Bitcoin instead of having to reinvest it in a slow growth business or a no growth business turns you into something that's very attractive. Cash is king again. It's
Right.
only just the structure of market that just kind of, requires growth forever. Otherwise, your stock gets hammered. That kind of strands these companies. So yeah, it's interesting. I think Bitcoin could be the thing that gets us back to, the baseline trend of how many public company assets there are on the major exchanges. We were like 15,000, I think, on NASDAQ and NYSE at one point. Now it's down to 7 or 8,000. The trend line would have been up over 25,000 by now. So we're running like 70% below trend as far as publicly listed companies on major exchanges in the US. But if every company that is profitable can put some or all of their profits in Bitcoin and ride the Bitcoin CAGR, then it makes sense for them to be public and investors will appreciate the fact that they actually make money. And then you're judged based on like how profitable are you and do you have a good treasury strategy? So I think, the easiest one for people to do is fresh start, copy MicroStrategy, do a SPAC, do an RTO, and just contribute the capital, and there's no operating business. The second one that I think is easiest for people to understand is like otherwise would have been a private equity target, but instead we're going to go on this Bitcoin path and plow that money into Bitcoin. And then I think the third one is going to be, is this a good strategy for growing companies? And I think specifically it'll be ones that have low capex, because you don't want the capital expenditure to be like heavily in competition with the Bitcoin purchases. So if you kind of grow without having to spend that much money and then can plow profits into Bitcoin. So it'd be high margin businesses, basically. I think financial services firms like Strive are a fantastic candidate for that, because it doesn't take much for them to keep, doesn't take a lot of investment for them to keep on growing that asset pile and that revenue stream. I think software businesses will be great Bitcoin accumulators as they grow. So anyway, that's what I've learned and thought of over the last, 8-9 months, kind of going deep on how I think this will play out.
Yeah, and with all of these, we've seen, like to your point, we're really starting to see more bigger public companies starting to acquire Bitcoin, put it on their balance books. But what I find really interesting about this particular cycle is that we're not really seeing much from retail, right? It seems to be like there's this idea that the average person still thinks they need to buy an entire Bitcoin to be involved in the game. Do you feel like that's a marketing problem, a UX problem, or is that just a human brain problem? What are your thoughts on that?
It's probably a human brain problem. And it is true, by the way. It's 100% true. Every once in a while, I try to get out with people outside the echo chamber and just see what it's like. So we did a booth just for fun at the Venice Street Fair down on Abbot Kinney, and we had a sign, and I was sending like some of our team out into the thoroughfare with all the people walking by, and the sign made perfect sense to me. And it said, it had an arrow pointing over to our booth, and it said $21 of free Bitcoin. And anybody that came over and signed up for an email, we'd give $21 of free Bitcoin. And I'd say like half of the people that we would talk to thought it was a scam, because you can't get a Bitcoin for $21. Like they know it costs more than $21. What they don't know is that you can buy a fraction of a Bitcoin or give a fraction of a Bitcoin. So I really think that, probably over half of Americans today don't know that you can buy a fraction of a Bitcoin.
Yeah, it goes down to like an eighth decimal, right? So it's like you can get as much as or little as you want, really. I know you got to get going soon, so we're going to wrap up. I got one more question for you. Let's fast forward. Let's call it 10 years. Swan's still thriving. What's one thing you hope the Bitcoin industry is doing totally different than it is today?
That's interesting. I mean, I'm a pretty big fan of the Bitcoin industry. I think so. I'll just twist that. Like I think it'll be nice if it's just kind of really understood, and I think it's starting to be understood that crypto blockchain is a very different industry than Bitcoin. I think the asset classes have been separated completely because the infrastructure layers of so many of these things kind of works across everything. It basically has meant that what gets built by infrastructure players is only the things that work across all crypto assets, including Bitcoin. And so there's very little infrastructure layer built for Bitcoin only. And so we don't really take advantage of what we could, that's in the code that people have theorized, even going back 10, 15 years now, of what can be built and will be built someday. And it's because there's so few business customers for the infrastructure providers that would do things just for Bitcoin. So I think, Lightning service providers or something like that, there just aren't enough customers to scale that in a big way. Like the only company that's scaling at all in Bitcoin infrastructure probably is Lightspark, which is, the only thing they do really so far is like withdrawals from crypto exchanges. Which is great. And I highly encourage that. And I think it's awesome. I think that's probably the main thing. I think there's just so much left out from product roadmaps that could be made so much better, because it's just not big enough and there aren't enough business customers for like something even closer to the metal to be able to scale. And that's only going to come with size and time.
Yeah, I think you're right. And Cory, I want to thank you so much for having you or coming on the show with us today. It was an absolute pleasure having you. Before I let you go, if our audience wants to learn more about you and Swan Bitcoin, where can I send them?
swan.com and Swan on Twitter. So just SWAN. And I'm Cory Klippsten. So you can put my bio in the link down there with my handle.
All right, you got it. Well, Cory, it was a pleasure. Thank you so much for joining us in the Blockchain Report. And will we see you at the Bitcoin conference? You going to be there this year?
Well, I'll be there. Be doing a lot of meetings. It'll be probably hard to
Yeah.
find me, but I'll be in town.
Totally. All right, cool. Well, we hope if we don't see it, we hope you have a great time. And thank you so much for your time today. It was a pleasure.
Sounds good. Thanks, Hank.